All right, so let's talk about Bitcoin. A couple of fairly straightforward long trade setups here. So first of all, let's pay attention to these green levels. These green levels are long margin pressure levels. Just to make that a little bit easier, I'll get rid of the red ones. So if you guys watch these videos that I put out, you guys know exactly why we're holding resistance at 31K and why we've been unable to break through this level. And that's because that's where you can no longer buy on 2x leverage and hide a liquidation point below the bear market low, right? So that decreases the incentives for the market to go long and reduces the amount of capital that they can go long with because they can no longer use 2x leverage. So the incentive diminishes to go long over 31K. It's also a 100% move from the bottom, right? Or essentially a 2x from the bottom all the way up to 31K. And that's where we've held resistance. So we've also seen a nice little retracement here. If we isolate for the risk reward levels or the risk reward incentives in the market, and we isolate for our SVB collapse, our last big stab down that initiated this move upwards, all the way up to our recent high, we get a 25% retracement, which is essentially our 3-to-1 risk reward level for shorts, meaning you get, if you can kind of see, in between these blue levels, that's a unit of risk or reward for shorts, right? Here we go. We're on a logarithmic chart, so each one is a little bit larger than the last, but these are each even. So you have 1 unit of risk, right, for a short, with your risk scenario being a new not all-time high, but swing high, a new breakout essentially, and your reward scenario being a move all the way back down to 20K. When Bitcoin crosses this 0.75 level at roughly 28,769, give or take, that's where you can no longer enter a short and get 3-to-1 risk reward. Pretty important. It's pretty important because the incentive to short, once we drop below this level, drops off dramatically. And that's one of the reasons why we held such strong support there yesterday, right? And we also have a really important key level or a midpoint coming in not far below that. So if we do go down for another stab, I would be looking for 28.3 to hold. So I'm going to get rid of those levels real quick. And actually, let me back out, and we're going to start looking at our short margin pressure levels, and then I'll talk about how I would personally be structuring a trade. And one of the other reasons that we saw such a large bounce out of this region yesterday is because it's also our 10x short margin pressure level. It's where you can no longer, or the market participants, once price drops below 28,925, it's where you can no longer go short and hide a liquidation point above this local high. That's really, really important. So you had simultaneously multiple short incentives leaving the market, right? So shorts are no longer entering the market. Bids start coming in down here, and it pushes the price all the way back up to 30K, which we've kind of ricocheted off of. So a couple of straightforward trades here would be to just buy this confluence level if we test it again, right? So this would be kind of your inverse head and shoulders situation where we come down to test, right? We drop below, we come all the way back up, and we test again. So not a clean inverse head and shoulders per se, but the general concept is here. So we test the bottom of this range again after a deviation, right? And then you just be bidding 28 or 28,925 roughly towards the bottom of this range and just looking to sell it back at the top of this range. So that'd be our first potential setup here, is just a short term scalp with a nice stop loss somewhere below this region, targeting 29.7 or so, right? Targeting the top of your range. That's going to give you 3.15 to 1 risk reward, depending on where you put your stop. Don't dislike that trade, though it is a little shorter term trade. The second trade setup that I would be paying attention to here is if we can get back up into this range. We can get back up into this range and reclaim 30K, roughly, not 30K, but reclaim 29.7 and spend some time reclaiming the overall range here. You can just simply go long, right? Simply go long. Target the top of the range. I would say 31.3. I wouldn't be too greedy and going for 31. The 2x long margin pressure level is sitting at just under 31. So you may want to, just leave a stop loss below the bottom of this range. Enter as we start printing a couple of 4-hour candles in here, and that's going to give you 3.6 to 1 risk reward, right? Depending on where you keep your stop loss, but it's going to give you, we're targeting over 3 to 1 risk reward. So we talked about, longing here, longing a recovery of this range. The third trade setup, which I think is fairly straightforward, is simply waiting for us to get to a trend level or to this longer term trend line, and just longing the trend line. I think I'd be shocked if we didn't get at least some sort of a bounce there that allows you to slide a stop loss into profit, right? And you could target 31K, target the top of the range, but at that point, if we get a strong reaction off of this trend line, we are in an ascending triangle pattern. So there's your uptrend, there's your that's a pretty sloppy way to draw it. Talked about this ascending triangle quite a bit. And essentially, ascending triangles, you want to buy the third touch. So wherever we come down here to touch, you buy the third touch and you target above the ascending triangle. If you want to get into like measured moves, I'm not going to get into measured moves right here, but you take the bottom of the triangle to the top, and that would give you a target of $49,000, which with the Bitcoin ETF approval, I actually would not say is too crazy. Like that's actually my base case. I know a lot of people are talking about like 35, 36K. I do think 35, 36K is quite likely, quite possible on a breakout here. But the Bitcoin ETF approval, I do think it could get pretty silly pretty quickly. Just super, super, super bullish if we start breaking out above 32K. And I don't think targeting 49K is that ridiculous. But as far as risk reward goes, even if you wanted to take your first take profit, maybe at 31K, right? And then target 34 to 36K with your second take profit, you're getting really, really solid risk reward. The other thing that I'd say, if you want to be more careful on this kind of trade setup and you don't want to necessarily buy just the trend line, you can wait, right, for a bounce off of the trend line and then a recovery of this key range, right? So again, you'd be essentially buying the recovery of 28.9K, which we see is coming in as a key level. It's where the shorts are less incentivized to enter. So if they take us down to the trend line, then we recover. That's your triggered along. I don't mind just buying the trend line blindly, right? Because if this does come back up to retest this level, right, you just slide your stop loss into profit, right? And just manage the trade on the backside. Hope this was helpful. Those are 3 potential trade setups off of the Bitcoin chart. Right now, we're just kind of chopping around in this range. Buy the bottom of the range, buy the reclaim of our prior range, or buy the trend line. Pretty simple. Those are 3 long setups. We are in an uptrend. In the shorter term, we are in a downtrend, but the macro trend is up. So I want to be looking for long opportunities. If we break the trend here, then we look for shorts, right? Until then, I don't want to short this horrendous risk reward on shorts. Just really, really bad risk reward on shorts. I don't want to short here until we break the trend. We break the trend, hold as resistance, then we look for shorts. Until then, I'm looking for longs. Hopefully that makes sense. If you enjoyed this video, please like and subscribe. And also check out Systine.ai if you want access to these indicators. So you can buy the indicators bundle for a one-time payment, or you can sign up for the research hub and also get access to the indicators. Where we send you asymmetric risk reward opportunities via email. We also posted the website. So there's tons and tons of content in here for you to go through. Airdrop guides, TradingView chart templates, principles, which is like educational content, plays, just a 1-pager analysis of opportunities that we see in the market to make some money. Also some research reports in there as well. So if you sign up for the research hub, you also get access to all of the indicators that I use in these videos. Last but not least, if you want to trade on leverage and you're based in the US, you can use BTCC. There's a link in the description below. If you are not based in the US, you can use the Bybit link in the description below, guys. Thanks so much for tuning in. We'll catch you next time. Peace.